Welcome to Daily Drive for Thursday, February 26th, 2026. I'm Jake Neer in Detroit, in for Kellen Walker. Today on the show, Stellantis UAW workers face a painful first, no profit-sharing checks. Lear lands what it calls the biggest seating conquest in history, and GM pivots to gas-powered vehicles for mobile service. Plus, Honigman's Chauncey Mayfield talks about what the Supreme Court tariff ruling really means for automakers and suppliers navigating refunds and uncertainty.
For the supply chain, one of the most important things is predictability. People can price risk, they can't price unpredictability.
Let's run through all the news you need to know to keep up in the auto industry. Stellantis UAW workers won't receive profit-sharing checks this year. The automaker confirmed it lost $2.2 billion in North America last year, posting a negative 3.1% margin. Tariffs and falling sales were major factors. The average payout for UAW workers at the Detroit 3 dropped nearly 40% to about $6,200. Ford workers will get around $6,780, down from over $10,000. GM employees can expect up to $10,500, a 28% decline. Stellantis says decisive actions taken in 2025 will support profitable growth in 2026. We'll have more on this story in a minute with our own Vince Bond Jr. Lear has scored a historic conquest by landing Ford's next-generation Super Duty seating contract. The win displaces Forvia, which supplied the program for 2 generations over a decade. Lear CEO Ray Scott called it, quote, the largest conquest win in our history, and I'd argue seating's history. The Super Duty win extends Lear's hot streak after also capturing GM's full-size truck and SUV seating at Orion Assembly. The loss is a painful blow for Forvia, which posted over $2 billion in losses last year. And GM is rolling out gasoline-powered crossovers for its mobile service program after canceling the electric BrightDrop van. Starting this quarter, dealers can upfit the Chevy Equinox, GMC Terrain, and Cadillac XT5 for Mobile Service Plus, cutting upfront costs by at least half compared to the BrightDrop's $150,000 price tag. Dealers pushed for the change, citing concerns about the electric van's cost, range, and size for navigating urban areas. The move comes as GM targets significant growth in mobile service, especially for fleet customers. And those are today's headlines. You can find more details on all of those stories at autonews.com. Joining me now to talk more about Stellantis' first loss as a company named Stellantis and the fact that UAW workers will get nothing in profit-sharing checks is Automotive News Stellantis reporter Vince Bond Jr. Vince, welcome back to Daily Drive.
Thank you.
All right, so Vince, the company's workers each received more than $3,700 in profit sharing last year, total of more than $47,000 each as their share of profits generated since FCA merged with PSA Group to form Stellantis back in 2021. How did we get here?
Well, looking back, it was several things. And so if you remember, the Charger, the Challenger, the Jeep Cherokee, all those vehicles were dropped several years ago. And so this profit sharing check we're seeing this year is sort of I guess almost like a culmination of stuff that's happened in the last couple of years. And so, volume was down. The Charger came back last year as an EV and volume was low for that model. So now they're having the gas model come out this year. So that should recover some sales. The Jeep Cherokee that was discontinued in 2023, that was in a really important mid-sized market. They are finally, back in stores now. They're starting to get into stores now. That's going to be a mainstream volume player for them this year. And then, of course, the Challenger, that's not even around anymore. So I guess they'll just have the Charger in its place. And so you look at those models that are lost and look at that volume decrease over years. It just, it takes a toll. And then at the same time, dealers back in 2024, they were warning Stellantis that Vehicles were overpriced, and they were just piling up on lots. And so Stellantis had to rebound by putting in hefty incentives to move those cars. And of course, incentives aren't free; you got to pay for that. And so Stellantis had to foot the bill on those incentives, and now we're seeing the the culmination of those as well. So it's a big factor. I mean, incentives, the tariffs that came in last year, less vehicles to sell. And so really this year we might start seeing some improvement just because they have more models coming into the market.
There's certainly a theme that we've been hearing with any Stellantis bad news. It's that a lot of these decisions that led to this were made under our previous CEO, Carlos Tavares. We've got a new CEO now, rosy days ahead under all of the things that he's trying to do to turn things around. Looking ahead, Stellantis has several new products hitting showrooms right now, like you said, the Cherokee, the Charger 6-pack. Based on what you've heard from dealers in the company, how realistic is this optimism about turning things around in 2026?
So this year, they set a retail sales goal of having a 25%, bounce. That's pretty ambitious. I'm not sure if they'll get there, but there are several models that are on the market now that should push them in that direction. The Hemi is back in the 1500. They're looking to move, around 100,000 of those this year. That could take a chunk out of that that sales goal they're trying to get. The gas version of the Charger, that should turn some heads and move some volume for that brand. And the Cherokee, of course, is going to be a mainstream player. Their starting point is going to be in the upper 30s. So if they can build those base models and get those out there, they should do some pretty good sales overall.
All right, Vince. Well, looking at your reporting over the next several months, I guess we'll find out. You're always on top of it. Everything Stellantis for us here at Automotive News. Thanks again for joining us here on Daily Drive.
Thank you.
Coming up, attorney Chauncey Mayfield breaks down the Supreme Court tariff ruling and explains why the auto industry supply chain is still waiting for clarity on refunds. That's next on Daily Drive.
Chinese automakers want to enter the U.S. market, but the path forward is anything but clear. On this week's episode of the Automotive News Shift podcast, Lei Xing, an independent analyst and co-host of the China, EVs, and More podcast, explains the real obstacles to Chinese vehicles reaching American driveways, including the Commerce Department ban. He also explains why the threat from Chinese automakers might be overblown.
Coming in and getting a foothold is only the beginning, but from there until you establish yourself as a kind of an Americanized brand, I think that will take decades.
I'm Molly Boygan. Join me on Shift, available this Sunday wherever you get your podcasts.
Welcome back to Daily Drive. I'm Jake Neer. Last week, the Supreme Court struck down President Trump's reciprocal tariffs, but the ruling doesn't affect the Section 232 tariffs on vehicles, parts, and metals. Still, suppliers throughout the automotive supply chain may be owed refunds, and the process for getting that money back remains unclear. Chauncey Mayfield is a partner and leader of the Commercial Transactions Practice Group at Honigman in Detroit. He joined our own Molly Boygan to explain what the ruling means for the industry and what comes next.
Chauncey Mayfield II, partner and leader of commercial transactions at Honigman's Commercial Transactions Practice Group in Detroit. Thanks so much for joining us.
Thank you.
So, a big decision came down from the U.S. Supreme Court last week, a 6-3 decision that said that President Donald Trump overstepped his authority in issuing a certain set of tariffs under a 1977 law. How does this Supreme Court decision impact the auto industry?
Well, the first thing it does is it allows parties to stop paying on those tariffs. So that's the very first thing. So in terms of the impact of the automotive industry, as of Monday morning, they stopped collecting those tariffs. So now those tariffs are not going to be paid any longer. Now, immediately following the decision, of course, we had the 122 tariffs that Donald Trump put back on. But some of those tariffs under that statute are lesser than, could be greater than the IEEPA tariff. So it's a little bit more certainty for the supply chain, at least for the next 5 months until we figure out what's going to happen with those tariffs.
And so the tariffs that were struck down by the Supreme Court were not the Section 232 tariffs on vehicles, parts, metals, imports. Those were implemented under a different law. But my understanding is that sub-suppliers or material suppliers from other countries may have paid some of those IEEPA tariffs. Is that your sense as well? I mean, is that really where this decision kind of gets to the heart of some auto industry companies?
Correct. So it's important to note that the tariffs are not going away. They haven't gone away. It's just these specific tariffs under this emergency statute has been deemed unconstitutional. But there are still the tariffs that a number in the supply chain have paid, right? Because the automotive industry is naturally, it's global, cross-border. And so a lot of different constituents, whether you're tier 1, tier 2, tier 3 suppliers, are still buying goods from overseas and importing those goods up the supply chain.
And so how should companies proceed now that the decision has come down from the court? And in particular, I'm wondering if companies that paid those IEEPA tariffs should anticipate demands from customers looking to basically claw back some of their own losses because of those tariffs. Do you anticipate that happening?
I do anticipate it's going to be kind of really case by case, depending on the contractual framework that any type of customer and supplier entered into. I do expect, though, that a number of those contracts would have provisions relating to, hey, if you get a refund on these tariffs, you have to refund us back for those tariffs. And that makes sense. We're only going to, if there were price increases given, they were given specifically for the tariffs that were in place during that time. Now, the confusion that's going to come up right now and what the uncertainty is relating to those tariff refunds. Immediately after the decision came down on Monday, a number of companies, especially those involved in the Supreme Court litigation, filed lawsuits with the Court of International Trade to start the refund process. I do believe that the courts are going to put forth some sort of refund process, but that's unknown right now. So right now, companies are probably kind of in a wait and see approach as to when that process of the refunds will come out. And once that is clarified, I do expect to see people pushing suppliers to get it. And it could result in some disputes among companies about those issues and when the money's going to come back.
Right. So if I understand you correctly, the importers that paid the tariffs are still awaiting instructions from the government on how they may actually get refunds. And therefore, if their customers are still waiting on refunds that may be obligated to them according to some contractual agreement, they may have to wait a little bit longer because that money actually has not started to flow yet from the government.
Correct. That money has not flown yet.
And I'm curious about if this Supreme Court decision and what you mentioned about the fact that companies may have negotiated potential tariff costs and refunds into contracts for this tranche of tariffs, if that type of thing is also present for companies that are paying the Section 232 tariffs. In other words, my understanding is that the Section 232 tariffs are not up for review in the court, first of all. Is that right?
They're not being currently challenged, no.
Okay. And so, anyway, if they were, is it likely that automakers, suppliers, companies up and down the value chain would have also established contractual provisions in the event of a refund for Section 232, or is that something that's specific to this IEEPA tariff that was applied, the sort of reciprocal tariffs applied by country?
Yeah, I think the biggest distinction to make is in the 232 tariffs, those are more sectorial and more limited into the goods that applied to the tariff. So we have to remember that those 232 tariffs, they were in place previously. And so some of the customer suppliers have probably built those into already the pricing of those tariffs. And to the extent that those, when they came back on again, similarly, yes, there's probably provisions dealing with the pricing, but those were more long-term to be seen opposed to these IEEPA tariffs. Because you have to remember, for the supply chain, one of the most important things is predictability. People can price risk, they can't price unpredictability. And one of the things when you have supply chain with long-term supply contracts, fixed pricing contracts, when you have this instability in the tariffs, especially what happened with IEEPA, it really does kind of throw a bit of a wrench into how people are, sourcing decisions and in contracts and the like.
And so you mentioned also that President Trump responded to the ruling by imposing a 10% global tariff under a different law, Section 122, and then said he'd raise it to 15%. Do you think that the 122 tariffs imposed in the wake of the Supreme Court decision are on sturdier legal ground than the IEEPA tariffs, or are they also potentially subject to challenge?
That is one of the things that I know a number of trade attorneys, including ours, are looking into. I think that to the extent they could be challenged, they will be challenged. Very similar to this. So I wouldn't go out and say that they are not legally enforceable as a matter of law right now, or they will be, but I do believe that they will be challenged and people will test to see if they could be struck down for the same or similar reasons of the IEEPA tariffs.
There's also now, it's a lot to keep track of, but there's also now new Section 301 investigations into different trading partners. Do you have a sense of how long the government may take to complete those investigations and make a decision? And would the decision in that case be the imposition of additional tariffs, or what is the outcome of an investigation in that situation?
Right. So from what I understand, the 122 tariffs allow for a 150-day period. And the 301, the investigations are likely going to try to be completed on or before the end of that time period. So there's not a break in the tariffs and the tariff collections. And so I do believe that during that time period, they are going to be doing investigations. Yet to be seen what the outcome of those investigations will be. But when those investigations do come out, at least the administration is signaling that there will be additional tariffs. And with the additional tariffs, there may be challenges to those tariffs again.
Got it. And then I also read somewhere that the Supreme Court decision may be likely to halt or delay consideration of the Section 232 relaxation for steel and aluminum. So, again, lots of moving parts here, but this is one of the tariffs imposed around the same time as the completed vehicles and parts tariffs. And, there was a tariff imposed on the import of steel and aluminum. So is the government reconsidering the rate of tariff for steel and aluminum? And do you agree with the contention that the Supreme Court decision striking down the IEEPA tariffs would make the government less likely to reduce the tariff rate on steel and aluminum?
I know it's out there. I haven't studied that specific aspect. What I will say is, from what I understand, the Supreme Court decision on IEEPA is completely separate than 232. Right? You got to keep these two things separated because the Supreme Court only related to IEEPA. It did not touch 232. If somebody was going to challenge 232, it would have to be done separately.
And I know that the Supreme Court is not reviewing any challenge to Section 232. Are you aware of any meaningful challenge, even beyond the court and in some lower court, to Section 232 that may have an impact on the auto industry?
I am not at the moment, but I think it's one of those. I mean, it's a very, you have to remember that the supply chain is very global, a lot of different moving pieces. People are trying to, I wouldn't say reshore, but they're looking at their supply chains in ways to reduce the tariffs. But again, tariffs have always been here, and for the foreseeable future will always be here. It's just going to be about, one, the amount of those tariffs, two, the predictability of what those tariffs will be, right? Because they've always been here, but what really threw the supply chain into shock was the unpredictability in the movement of those tariffs. Because you have to remember, parties enter into long-term fixed price supply agreements over years, not contemplating a new and changed tariffs. That being said, people have started to try to contract around the tariffs to put forth discussions that may occur if tariffs are imposed. But again, that's going to be on a case-by-case basis, depending on the relationship, the goods at issue with the different customers and buyers at play.
So if I hear you correctly, the companies have started to make decisions around reshoring supply chains, and it's not like you can make these changes overnight, and therefore they're sort of staying the course. Is that what you're saying? That companies that were already investing in reshoring American manufacturing are going to just continue doing that even regardless of the IEEPA decision?
I think so. I think so. So tariffs is one input, and of course, a ton of different costs, right? That parties have to look at. And if a company made a decision to onshore their supply chain, I could not say that it's definitely because of tariffs and tariffs alone. There's probably a number of companies that decided prior to the IEEPA tariffs to onshore, and whether or not they were speeding it up or slowing it down, depending on IEEPA. But it's definitely consideration into it. But you have to remember that onshoring a facility is a lot of different things that are going to be taken into consideration, a lot of different inputs, and that is a cost to be considered. But that may or may not be the weighing cost that makes a go or no go when it comes to that type of decision.
Chauncey Mayfield II, partner and leader of commercial transactions at Honigman's Commercial Transactions Practice Group in Detroit. Thanks so much for joining us.
Thank you.
That's Daily Drive for today. I'm Jake Neer, in for Kellen Walker. Thanks to our own Vince Bond Jr. and John Irwin for their reporting for today's podcast. We also had reporting from Kurt Nagel of our sibling publication, Crane's Detroit Business. You can get the latest news on supplier contracts, profit sharing, and everything happening in the auto industry at autonews.com. Come back tomorrow for a conversation with Kyler Owens of Wide Whale about its latest Voice of the Customer report.
For the automotive nerds around, there's so much great data to extract out of that. And there's a bunch of information that, honestly has been sort of blind to a lot of dealers for a long time.
We'd love to hear from you. Let us know what you think of the show and the topics we covered today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoy the podcast, remember to like, leave a review, and subscribe so you never miss an episode.